Welcome to Just Ask Freeman TV. My name is Cynthia DeFazio, and I'm joined today by Freeman Owen Jr. He's CEO of Financial Sources Incorporated. Freeman, Just Ask Freeman. How are you doing?
Just Ask Freeman, and we're on the show. This is going to be a great show as usual.
Absolutely.
We've got some great information to provide to our viewing audience, and it's a real pleasure to be here again with you.
Oh,
I tell you,
Freeman, thank you.
It makes my life so much easier, I tell you.
Aw, thank you. Well, I enjoy my time with you because, again, the information that you provide is so amazing. It's so timely right now because so many people are either being forced into retirement early or perhaps they just don't know how to retire comfortably. Tons of questions about Social Security, Medicare. Freeman, you have the answers for everything. So it's really nice the way you deliver the information to the viewing audience.
Yes, indeed. I appreciate that. And, you know, no matter how hard you plan, sometimes there could be a little hiccup in your plan for retirement, all right? Poor health, family situations, the dynamics may change, just to name a few. But I'm going to talk about at least 4 to 5 of those items there, steps that can help our viewing audience have a secure retirement. But first and foremost, let's look at the 401k.
Okay.
TSP, the 403B. These are employer-sponsored retirement accounts.
Okay.
All right. It's a contribution or a plan that you contribute to, all right, for your, hopefully, lifetime income.
Okay.
And it's an essential asset for most workers. However, distribution problems coming from employer-sponsored retirement accounts. There's limitations. There's not too many fixed type of items that will produce guaranteed income. There's some volatility there.
Okay.
So one of the things you want to do is roll over your 401k.
Okay.
To your own individual IRA.
Okay.
All right. And that's why I always say, well, you really want to know how to get the most out of that 401k, roll it over to your own individual IRA, Just Ask Freeman.
Just Ask Freeman.
And I would like to offer our text, okay, the 10 IRA mistakes and the tax traps that are associated. Now, later on in this segment, you'll give them the number to call in.
Sure.
Okay, because
Absolutely.
the line's going to be flooded pretty soon.
Yep, they always are, every week, which is incredible. And I'm not surprised at all. Absolutely. But I want to talk a little bit too, Freeman, today, if we could, about just helping to manage Medicare. Because I know we've talked about it in the past, but a lot of people that are going into retirement right now, they may have a lot of questions about Medicare. Can you shed some light on the different components of Medicare, if you will?
I certainly will.
Okay.
All right, let's look at Part A.
Okay.
Which is hospital stay. It provides that type of service, all right? And it's a free component of Medicare.
Okay.
Then you have Part B, which is more or less for your own, there's no copay, you can see your own physician, with no copay, specialists, ladies, GYN, males, you can see your doctors and the physicians that you had or have when you were gainfully employed before you even retire. And then, of course, you have Part D, which is more or less your prescriptions. Some folks have benefits with eyeglasses, prescription drugs, etc. All right. But sometimes folks make the mistake of not filing for their Medicare at the appropriate time.
Okay.
You know, they're just sort of like maybe, now here's the difference. If they're working, it still would be beneficial, Cynthia, if you're working and you reach age 65, to make sure you at least get Part A.
Okay.
Do you know what happens if you fail or delay the benefits, the benefit of your Part A? Well, here's what would happen. It would be tremendous fees. And I think that those fees will continue on for some time.
Okay.
So you just don't, well, let me tell you this. If you want to know more, just ask Freeman.
Sure.
because we have to manage Medicare. It's a critical part of your retirement.
Absolutely.
And I would recommend, you can help make up the difference if Medicare is not there eligible for you, if you're not eligible for the type of health care benefit that you're looking for, a health savings account called HSA.
Okay, okay.
Now let's step into one of the number one sources of income that retirees rely on.
I would say Social Security.
There you go.
Okay.
Evidently,
I've been hanging around you for a while,
I
Freeman.
tell you, you knew. Just Ask Freeman. That's it. Social Security, very, very critical. It only. I remember at one time, Social Security covered about 43% of your retirement. Well, it's now 36%. We have to, a lot of folks rely on Social Security, but you have to learn how to maximize Social Security. Now, there are about 3 eligibility ages. Age 62. The full retirement age now has been extended to 67 if you are born 1960 and beyond. And of course, your final eligibility age is age 70.
Okay.
Alrighty. Now, a lot of folks just make mistakes when they're listening to aunts, uncles, brothers, sisters. You better go and get your Social Security benefit. And because I've heard it, and the new clients would tell me, my sister told me, if I don't get my Social Security at 62, there'll be no more Social Security.
We're hearing that a lot right now from different people all over. There's this fear that it's going to go away.
Yeah. And during this pandemic, the voice is loud now.
Yeah,
because
absolutely.
prior to that, the shows we did prior to the pandemic, folks want to know, well, my uncle told me I'll come on and the Social Security's going out of business. They say it like that instead of saying insolvent. And I say no, but even now you hear more, there are more and more people coming to the show, calling in, and they want to know, what can I do?
Yes. Sure.
Will my Social Security benefits be there? And I say, look, yes, they will be there. Just Ask Freeman. We'll do a Social Security report for you. All right?
Absolutely.
And so when we help them understand when to file for their Social Security and how to maximize that Social Security benefit. And like I said in the last segment, the lady said, you changed my entire life for the good.
That's
fantastic.
And
you hear that kind of work, that type of, those remarks, and it just makes you feel real good that what you're doing for people.
Yeah.
And the knowledge that we bring.
Absolutely.
I say we, even you help me, Cynthia. Our knowledge base, they say, just Ask Freeman. He knows. Well, bring that 40 years of knowledge. Put it right there on the screen. Can we share the screen? Because we're doing this virtually. And learn how to deal with maximize our Social Security.
Sure.
Another key element that our viewing audience should know. Wealth transfer, all right, or estate planning. Well, that provides for the surviving spouse and future generations, okay? Update that will.
Okay.
We have attorneys that could work as a consortium of attorneys that deal with living trusts, power of attorneys. Now, I don't give legal advice, but I can call in accountants, attorneys to take care of the needs. And even the attorneys say, well, if this person, I say, well, just Ask Freeman if you need an attorney for your living trust, all right, your advance directive. If you have a need for an accountant, I have a great accounting firm to refer you to. So we have a well-balanced firm.
Definitely.
Yeah. See, and I appreciate it. That's why I've been doing this and I really enjoy it. You see the folks, their faces light up. And I did a email. I send emails via video.
Okay.
All right. And I talk to the new clients and tell them, I say, well, I hope you're very pleased. I appreciate your trust. I never say thank you for your business. I appreciate your trust.
Sure.
I got one back after we did a direct rollover.
Okay.
Set up a lifetime income that that client could not outlive. The beneficiaries were intact. And the Secure Act changed the inherited IRA. I'll elaborate that on another segment.
Hold that thought, Freeman, because it's time for us to open up the phone lines for the very first time this week.
All right.
To the viewers at home, the number to call is 833-414-7233. We know you have a lot of questions about planning your perfect retirement. Well, just ask Freeman. What he's offering you today to the first 10 callers is a complimentary consultation. This consultation will take place virtually. You can be in the comforts of your home. Freeman will be in the comforts of his office. Again, talk to him about what your plans are for retirement. Let him design something that works perfectly for your specific situation. Again, we have 10 spots available this week. Number to call is 833-414-7233. We'll be right back after this commercial break. Just ask Freeman.
All right.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Nice. You're a big part.
Welcome back to Just Ask Freeman TV. My name is Cynthia DeFazio, and I'm joined today by Freeman Owen Jr. He's the CEO of Financial Sources Incorporated, otherwise known as Just Ask Freeman.
That's right. You want to know? Just ask Freeman. All righty.
Absolutely.
And speaking of just asking Freeman, we were talking about transfer of wealth.
Yep,
all right.
Absolutely.
Making sure that your wishes are carried out. Something else is important too.
Okay.
Managing debt.
Absolutely.
I was a little bit younger. I heard people say, "Well, I'm gonna purchase things and I'll get around to paying for it." And I always said it is cool to have good credit. Your word is your bond.
Absolutely.
For your big ticket items, you want to purchase a home. Automobiles, which is a depreciating object, but it's costly.
Sure.
So what do you think? If you have poor credit and you are swamped and inundated with debt, that's not a happy retirement.
No.
Because there are some folks out there that just charge.
Yeah.
And they have a tremendous amount of debt. Well, you have to manage it. 2 out of 3 current workers call debt a major problem. And more than 40% say that is negatively impacting their ability to save for retirement.
Okay.
I've got a plan. Just ask Freeman. And really want to know that plan? Just ask Freeman. And
Sure.
Cynthia, you will give them, because we have so many spots left.
We do.
You'll give them that
We
phone
do.
number.
I will.
Because it's very, very important to minimize or to eliminate debt when you step out into the world of retirement.
Yeah.
And if you want peace of mind, alrighty, knowing that you don't owe everyone and you're drowning in debt,
Exactly.
that's not a good feeling being a retiree.
Yeah.
And it's very, very difficult to save money.
Absolutely.
You owe everybody. I know on one show we talked about the 5 years that we were preparing. And then we discuss even how to get this person prepared 10 years.
Sure.
Well, what we do is we do a detailed report. All right. Get that done. A budget so that we know what our outlay income is and our outlay. What's the amount of the mortgage? How about utilities? Food, healthcare costs. We just itemize all that.
All of that, absolutely.
Exactly. And then we looked at the income producing assets. All right. How can we manage the debt, get that out the way? And I offer them my book, The 10 IRA Mistakes, because now we're looking at qualified money to bring into the fold for retirement. So you get a copy of my text, The 10 IRA Mistakes, and the tax traps and how to avoid those tax traps.
Sure.
That's just one of the offers. So managing debt. Now is the time rather than later when you're getting ready to retire. You don't want to be mired in debt.
No, not at all.
And it's ugly. Okay.
Freeman, especially, I would assume your credit card debt specifically should be paid down first, because doesn't that often carry the highest interest rates?
It does. Your credit card debts carry a tremendous amount of income. You could even get, I was going to use a vernacular, jammed up, which I am, with the so-called zero interest rate for so many months.
Okay.
Well, if you want to know how to manage that, just ask Freeman.
Okay.
Okay, because there's a little caveat in there that can you make the error and all of a sudden it's 19, double digit interest on your purchases. Managing debt is so critical, and especially credit card debt, because it's so easy to take that card out. You look at an item. Okay, I'll get to it. Well, next month goes by, you pay minimum payment.
Yeah.
The minimum. 5 years later, you're still paying the minimum.
Yeah. Yeah.
So that balance has increased significantly because we're paying the minimum payment and the interest rates are significantly high. Okay. One thing is I wanted to talk about is consolidating and rolling over your retirement accounts. I've seen, whereas I help clients go through their almost virtually, I go through their boxes per se where their statements are. They haven't looked at them. And some have not even opened their statements that they receive quarterly. They don't know.
Out of just fear or just pushing it aside?
Just pushing aside.
Okay.
And Cynthia, they have the fear of opening that statement because, did I lose money?
Yeah.
And I did a webinar, as a matter of fact, last week. And I showed a slide over a 2 or 3 month period during this COVID-19 period here. And we saw how that volatility had carried those assets down 31%. Then I showed the slide again. I said, well, look, recovering, or how can we get these monies back? For example, if you have $100,000, you lose 31%. That's $31,000. What if you have $1 million? That's $310,000. Here's the kicker. What if you are age 60? What if you're age 65? How are you going to recover? I call it back from the bottom.
Sure.
A tremendous loss that we had a few months ago. Okay, so that's significant. Cindy, and a lot of folks, some missed it, but others say, I lost so much money. What can you do? Well, we have plans, written plans. Might not recover everything, but we sure can set you on the right path. And if you want to know, just ask Freeman.
Freeman, perfect time for us to open up the phone lines now that you segued into Just Ask Freeman.
All right. I love it.
So I have to tell you, we only have 4 spots left because 6 have already been taken. So to the viewers at home, once again, there are 4 spots remaining this week. The number to call is 833-414-7233. What Freeman is offering you, in case you are just tuning in, is a complimentary consultation to really go over what you have in place for your retirement plan. This consultation will be held virtually, so you can be in the comforts of your home. Freeman will be in the comforts of his home or home office, and so you can still see each other and ask each other questions while being in the comforts of your own home. Again, 4 spots are open. The number to call is 833-414-7233. When we come back, we're going to have more questions and answers for Freeman about how to plan for your perfect retirement. Remember, just ask Freeman.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place, then help determine if you are well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision. So why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you are getting the most out of your retirement income plan.
Welcome back to Just Ask Freeman TV. My name is Cynthia DeFazio. I'm joined today by Freeman Owen Jr. He's CEO of Financial Sources Incorporated, better known as Just Ask Freeman.
Just Ask Freeman. If you want to know, folks, just ask Freeman.
Yes.
As a matter of fact, if you want a second opinion, and let me kind of rehash about the various plans that we discussed in the last segment. Number one, consolidate your accounts. Once you roll over your retirement accounts, you don't stop there. We can help you consolidate those individual retirement accounts. Now, the book I have is the 10 IRA mistakes and how to avoid the tax traps that are associated with that, all right?
Okay.
So in that book, I talk about rolling over and consolidating your retirement accounts. You don't stop there. You'll either have other accounts, savings and other income-producing accounts. We can consolidate those with one financial services provider, one that you're already comfortable with. And that works through me, Just Ask Freeman. All right? and something else, we talked about managing debt.
Sure.
That is so key. You know, it's amazing when they get their second opinion, and I use the software, interpret verbally for them, show them graphs, simple, not over their heads, herewith, by, we don't do that. Solid reports that the client can interpret and understand. Simple language, you'd be surprised, the simple language that is used. And the people, the clients there, our viewing audience is looking at us now. When you just ask Freeman questions, very simple terms.
Sure.
All right? You don't have to prove how smart you are. Simple terms. And folks, and let me tell you something else, Cynthia.
Okay.
I live a lot of this stuff. The Social Security.
Sure.
The managing of qualified plans.
Okay.
You know, how my wife and I, years ago, was able to transfer and roll over our volatile accounts the past 10, 12. It's been a good 15, 20 years.
Okay.
And where we had options that we could offer our existing clients now, they've been with us 25, 30 years. There were safe, predictable vehicles that, well, I should say, that vehicles that offer predictable income. And how we took it upon ourselves, like, we're getting a little older here. We can help not only ourselves, let's help others and put together the knowledge. Let me tell you, knowledge is power. Well, yeah, knowledge is power when it's exercised and when you put it in place.
Absolutely.
And you know, the last segment we talked about managing or transfer of wealth.
Yeah, absolutely, we did.
And estate planning.
How important that is. And also you talked about how important it is to have your proper beneficiaries in place. A lot of people forget about that. Like they may have gone through a life change, let's say a divorce, Freeman, and they're remarried, but they forgot to change their beneficiary. That can be a problem.
That can be a problem, especially if you have an extended family, or I should say you have let's say you have a second wife or husband.
Yeah.
Okay. And there are children on, say, the new spouse, and there is a divorce where the first marriage, there were children. How does the estate of let's say, the first spouse and his or her new spouse, how are the benefits of the estate distributed to the children of the first spouse?
Sure.
And this new spouse has kids as well.
Sure.
I used to call that the expansion here of families, or blended families. Yeah. If you're not careful, that's why just Ask Freeman, you want to know how to put together the beneficiaries properly. Now we have the Secure Act.
Okay.
It just came out. What is that? Well, what I'm going to have to do is, I know that I only have a few seconds left to explain it, but since I was talking about beneficiaries, I will give this piece of that information.
Okay.
The inherited IRA, where we could have beneficiaries, non-spouses, receive a legacy from parents, grandparents, and whomever. Those proceeds would be given to that adult child or small child, whomever, non-spouse, such that those proceeds were distributed over the life expectancy of the beneficiary. We can need to talk about that a little bit more. Maybe in the next show, we'll discuss the Secure Act a little bit more.
That would be great, Freeman, because unfortunately we run out of time so quickly, because once we start talking and you're so passionate about the subjects that we're discussing, the time just flies by.
It flies.
But we have one consultation left that we get to offer. So if you don't mind, I'm going to take that to the viewing audience now.
Take it there.
To the viewers at home, there is one spot open for that complimentary virtual consultation. Again, the number to call is 833-414-7233. Thank you again for watching Just Ask Freeman TV. We will see you next week. Be safe, be happy, be blessed, and thank you again.
All righty.